This video is to be used for educational purposes only and is not intended to replace individual research or licensed investment advice. Unique experiences and past performances do not guarantee future results. Trading stocks, options, and spot currencies involves substantial risk. There's always the potential for loss. Your trading results may vary. No representations are being made that any software or training will guarantee profits or not result in losses from trading.
Will Geisdorf here with your Forex report for Wednesday, November the 8th. The dollar avoided a big downside breakout today after falling sharply yesterday, but remains under pressure in the broad market. With no U.S. reports to work with and very little data released overnight, dollar bears did not even attempt to take out yesterday's U.S. session lows. Instead, the greenback found some strength in early U.S. trading. The rally began between 7 and 8 Eastern Time, but came into an abrupt halt around 10 o'clock. Bears stepped back into the market, using the bounce as a chance to add shorts at better prices. This led to a move that erased most of the dollar's gains and left the majority of pairs flat for the day. With the exception of the Aussie and Kiwi, all the major pairs are now trading within a few pips of yesterday's closing price nearly 24 hours ago. So what does this all mean in terms of technical analysis? We are left with the overall look of a bearish dollar, both in major currency pairs as well as the dollar index. The good news for dollar bulls is that the index may finish the day in slightly positive territory and is still supported by the bullish trend line that extends higher from early June. Of course, the prevailing trend on the daily chart is bearish, a move that began on October 13th. Furthermore, the 50 and 100-day moving averages are located at 85.90, 85.75 respectively, with a current price of 85.45. This means that any meaningful rally in the dollar will find resistance quickly. The dollar index created a pivotal support at 85.10 yesterday and must now sustain a price above this level. If this support is breached, we could see the dollar spiral lower for several days or even weeks. Tonight's calendar is rather bare until tomorrow's conclusion of the Bank of England policy meeting at 12 GMT. Most economists expect that the two-day meeting will end in a 25 basis point rate hike, bringing rates to 5% in the UK. This is already priced into the pound sterling, however, which leaves any accompanying statement to guide the currency. Following this announcement, the U.S. trade balance for September will be released. The dollar has been able to shrug off record deficits in recent months in the midst of a more bullish sentiment. However, the currency may not be so lucky tomorrow if we see any unexpected increase in the deficit. This has been your Forex Report. Have a great night trading.